On the day when the government has presented the budget for FY21, Dr. C Rangarajan, former Governor of the Reserve Bank of India, is joining us with some thoughts. Dr. Rangarajan, thanks so much for taking our call. Let me first ask you for an overview of what you made of the budget, sir. The attention, as usual, more likely this time around, is on the fiscal slippage that the government has had to finally give into.
Well, the fiscal deficit, as they have indicated, appears to be reasonable. One had expected the fiscal deficit to rise from the budgeted level in the current year because the revenue shortfall has been very severe. The next year fiscal deficit of 3.5% on the face of it is very acceptable, but the big question is whether it will stick because the expected nominal income growth, national income growth next year is about 10%. And the revenue projections with gross tax revenue is expected to grow at 12%. So it's a buoyancy of greater than 1, which we have not seen in the last 2 years. Therefore, it's a matter of some concern whether the gross tax revenue will rise this much. But it is not too far away, too far off from what one can expect. But what is really a very high level of fixation is the non-tax revenue, and more particularly the disinvestment proceeds next year. It's pitched at a very high level. And therefore, we probably may end up next year also with a fiscal deficit of 3.8%. I think the whole question is on the budget is whether A, it will push up the demand, B, whether it will increase the level of investment. On the first question, much depends upon the level of expenditure. As I see it very quickly, that the increase in the total expenditure is expected to be of the order of about 13%. This is very doubtful whether this will push the demand that much. One would have expected a little more focus on expenditures because the finance minister went on for more than an hour explaining about various expenditure items, and one is not very sure where the increase is and how much of the increase over the previous year is. Therefore, it's not very clear on the face of it whether this order of increase in expenditure will really push up either the rural or urban demand. For example, even the changes in the personal income tax may not have much effect upon on demand because many of the taxpayers, even within the income group which is supposed to benefit, may not really fully benefit. I think the concessions are not very strong. In any case, I am not arguing for any big change in the personal income tax. But the point really is I am somewhat doubtful whether the increase in expenditure will push up the demand. On the investment side, my concern is that the capital expenditures of the government of India still remains at 1.8% of the GDP. It was originally intended to be 1.6% of the GDP last year. Therefore, it remains more or less in the same range. Therefore, much of it will depend upon whether the private entrepreneurs, both including companies, will take some of the measures that have been introduced as favorable to them, and therefore will begin to act in terms of investing. Perhaps there could be a greater inflow of funds from outside into India for investment purposes. Perhaps the direct the distribution dividend tax, the removal of it may help many of the foreign companies much more than the domestic companies, and therefore that could actually be a reason for a greater inflow of funds into the country. So on the whole, if you ask me, the budget is well-intentioned. Perhaps a greater focus on expenditures might have been in order. The fiscal deficit is likely to go beyond 3.5% of GDP. Yes.
Dr. Rangarajan, allow me to ask you a few specific questions. One is on this decision to invoke the escape clause, which was provided by the FRBM Review Committee, actually linked to an independent fiscal council. We don't have the fiscal council. This escape clause has been invoked, and there was a slightly worrying provision in the 2018 amendments of the FRBM Act, which allowed the Reserve Bank of India to buy bonds in primary auctions should the escape clause be invoked. We are all hoping it doesn't go in that direction. I'm sure you would caution against it given the history of deficit monetization that RBI has come through. Very difficult history.
Yeah, I think so. I personally think that when they went from 3.3 to 3.8, even though the finance minister mentioned that, I hope they are not invoking this particular provision which is associated with the escape clause. And I also do not think that the escape clause permits the government of India to add 0.5% to whatever level they had indicated in the budget. I would interpret it to say only for 0.5% above the implicit mandate of 3% of GDP. Yes, it would be a worry if they really invoke that provision and request the Reserve Bank of India to come into the primary market. The problem will be twofold. One is that if by the Reserve Bank of India coming into the market, actually it really means monetizing the fiscal deficit. Second is that whether the coming in of the Reserve Bank of India was expected to lower the rate of interest as well. In any case, we moved away. It was during my time that the Reserve Bank and the government moved into a new arrangement under which the whole system of issued treasury bills was abolished. I hope we don't go back to that. I certainly would caution the government on that and the Reserve Bank on that.
Dr. Rangarajan, for now, the budget documents seem to be suggesting that the incremental gross borrowing that will come due to the higher fiscal deficit is coming through the NSSF, that's the National Small Savings Fund. The budgeted borrowing for both FY20 and FY21 is at 2.4 lakh crore. Even that is not an easy option, wouldn't you say, because it does lend to the stickiness of interest rates in the economy if the government has an incentive to keep borrowing and hence keep ensuring that money is flowing into the Small Savings Fund.
Well, I do think that if the government means seriously about lowering the interest rate, then they should really bring down the small savings rate. I mean, I think the government cannot, on the one hand, talk to the Reserve Bank of India and say that it would be better to bring down the repo rate, and on the other hand, stay with higher rates on small savings. Independent of any other consideration, I would think that if in general the government feels that the rates of interest should be lower, then they should really act and bring about a reduction in the small savings rate also.
Dr. Rangarajan, a few financial sector issues that came up. We didn't see any large package for NBFCs given the stress there. Perhaps that's just as well because it may not be in the purview of the budget. We did see an attempt to revive confidence of bank depositors by raising the level of deposit insurance to 5 lakh. That is a substantial increase. Just in terms of sentiment, a little bit of comfort, do you think that's okay to have done?
Well, it is okay to have done, but then this does not fundamentally answer the problem. I mean, the fundamental problem was that people were worried about the fact that they are keeping deposits in the banking system, how safe they are. The finance minister preceded our statement made the statement along in this connection, saying that the monitoring system is good, and therefore it would ensure the safety of all scheduled commercial banks. That's what he said. Therefore, ultimately, the question that is being asked, or the question that is generally being raised, is whether the banks will ever close down at all. I mean, the whole question arises only if the bank closes down, and whether at that point will the depositors lose. So far, the Reserve Bank of India has managed it in such a way that no scheduled commercial bank really failed. When there was a difficulty, some kind of a merger was arranged, and that helped to overcome the problem. Therefore, it is not the guarantee of the the deposit insurance mechanism that is going to reassure the people. What is going to reassure the people is much more what the regulatory system and what the monetary system is going to be.
Fair enough. Dr. Rangarajan, you mentioned divestment, very heavy divestment receipts being budgeted for. Within that is an attempt to take LIC public. Do you think it would, firstly, do you think that's advisable? Secondly, it would be tough to do given that, LIC has always been considered a little bit of a black box in the Indian economy.
No, but on the whole, I think LIC has been doing well, and after all, there is no given market price and so on and so forth. Therefore, they might be able to do that. But I think the more important thing is that the government is really skirting the issue. I mean, I think the problem is really to address the other public sector enterprises which are in the manufacturing and other areas where they should be doing. And they failed to accomplish that. And this year there has been a very severe shortfall. Therefore, they are taking an easy way out. And since LIC has been showing profits and so on and so forth, they might be able to divest a little bit very, very easily and perhaps achieve the target. But I think this is not really disinvestment in true sense of the term, because the idea of disinvestment is really to bring about change in the management, bring about change also in the way the companies are being run and so on. That will not happen. I mean, I think that's the LIC will function as it has been functioning before. Therefore, they are not biting the issue of disinvestment.
All right. Dr. Rangarajan, I have one last question, but it's an important one. There's a place in the financial market section where they talk about the fact that certain specified categories of government securities would be fully opened up to non-resident investors. And then they, of course, go on to say that the FPI limit in corporate bonds would be raised to 15%. There seems to be an attempt to open the capital account a little bit more. Would we start to more and more run into the impossible trinity? Should we be looking at, drawing in more and more overseas financial savings to fill the gap that we have here domestically?
Well, I mean, all kinds of foreign inflows, debt instruments, whether it is government or corporate, is a way of financing the the investment domestic savings gap. I mean, that's the way you have to look at it. Therefore, allowing the foreign segment to invest in government securities in rupee terms is not a bad idea, because I think the exchange risk is being borne by the outsiders. There is a greater risk in terms of sovereign bonds, and I would not advocate that at all. But in the case of foreigners investing in government securities denominated in rupees, the foreign exchange risk is borne by the foreigners, and therefore some amount of investment in government bonds can be permitted.
But you would advise, Dr. Rangarajan, that caution be exercised, because there's been a lot of talk about listing on global bond indices. These bond indices typically require far greater limits of FPI investment than we have currently, which is 6%. If the government is attempting a listing on the global bond indices, steps have to be taken cautiously, you would say?
I think we should do it cautiously. I mean, I think we did permit it, even in my time, but it has been kept it more or less at the same level. I think the idea should not be that the easy accessibility of funds should be the facilitating factor for incurring larger deficits. I mean, this is not the way it should be. And therefore, there is need for exercising caution, but there is, but this avenue need not be closed. The avenue should be open.
Understood, Dr. Rangarajan. Thank you so much for sparing some time for us. That's Dr. C Rangarajan, former Governor of the Reserve Bank of India, talking on deficits, said that next year's deficit may be tough to meet given the assumptions.